Welcome to Bank of Baroda's analyst conference call. Hope you and your family members are safe and doing well. We have on the call today Mr. Sanjeev Chadha, MD and CEO of the bank, along with the executive directors. We will start with initial remarks from the MD, then follow it up with the question and answers. Before I hand over the call to the MD and CEO, I would like to say that the analyst presentation has been uploaded on the website, and the standard disclaimer in the presentation applies to this conference call as well. Sir, over to you for the initial remarks. Thank you.
Very good afternoon, good evening to everybody. Thank you very much for joining the conference call. First of all, a very happy new year to all of you. I do hope in the next quarter things will be better and we can meet in person at our office. I will not take too much of a time in terms of talking about the numbers because you have had access to them. I'll just make 4 or 5 broad remarks which I hope can cover some of the questions you might have in mind, and then we can go to the actual questions. So first of all, during the quarter which is under review, BOB completed its merger with Vijaya Bank and Npa Bank. So as of 12th December, all the branches of Vijaya Bank and Npa Bank were migrated onto the core platform of BOB. So the merger stands completed in all respects. It has been a fairly successful, smooth execution with very few issues along the way. It also has gone a long way in terms of meeting the objectives that we had set ourselves when we went ahead with the amalgamation. There was a very aggressive plan for cost reduction in particular, and very happy to share that the bank has adhered to that cost reduction plan almost to a T, and in some cases actually exceeded that. In terms of broad numbers, we expect this year to make cost savings about 1,300 crores on account of the merger, and over the next 5 years, a total aggregate saving of 10,000 crores. And as I mentioned, we are going as per plan. So among the targets that we had set for ourselves was the rationalization of 1,300 branches. That is closing 1,300 branches of the combined entity, which is pretty ambitious if we were to consider that the total network spread about 9,500 odd. So as things stand today, we actually have achieved that target. So 1,300 branches have been closed. Similarly, there was a target to close 500 low-performing ATMs. We actually have shut 1,000 ATMs down. So these are significant cost savings that we expect to accrue. Some of them are visible within this year. In a larger proportion, they'll be coming next year when we will not be paying the rents on these 1,300 branches for the full year. So even if you were to look at the presentation, you will see some signs in terms of these cost savings being affected. Rents, for instance, actually are about 5% lower in this 9-month period as compared to what they were in the previous year. This is despite most of the savings coming at the tail end of this period. Secondly, if you were to look at the salary bill is also lower in absolute terms as compared to last year, because we have not gone in for any significant recruitment at all, and we do not propose to do that also over the next few years. The second key benefit which came in terms of costs has been through the expansion of the savings bank franchise across the entire network. So from 1st April 19, which was the effective date of the merger, the CASA ratio has increased by 400 basis points. So that's something which is very significant in terms of savings for the bank. The second point I want to touch is in terms of the emerging business profile. So what we have been trying to do is to see how we can get a disproportionate part of the growth from retail loans and secured retail loans. So you will see that our retail loans actually have increased by about 13% during the period under review YOY, and this loan has come from car loans, which is 22%, home loans, which is also double digit, and we believe this is a strategy we would wish to continue to pursue, because the bank is, as of now, skewed in terms of balance sheet in favor of corporate, while that is indeed a very valuable franchise, BOB is the second largest corporate lending bank in the country. But nevertheless, we believe that a rebalancing would be of benefit, both in terms of keeping a handle on any volatility in asset quality, and also given the current context where liquidity is plentiful in terms of protecting margins. Now, so the corporate growth has been driven, therefore, largely based upon the desire to absorb whatever excess liquidity is there and make sure that given the uncertainty of the times, that the underwriting quality is absolutely top rate. So it is this combination of aggressive secured retail growth and corporate growth of high quality to absorb excess liquidity, which has allowed us to outperform the industry in terms of loan growth, with a domestic book growing by something like 8.3%. As we had discussed in the last quarter, in terms of deposits, we have tried to keep the discipline that deposits are required only to fund loan growth, and we should not be chasing deposits. In fact, we should not be having any deposits which result in excess liquidity, which has to be optimally deployed. So our deposit growth has been as per plan, but it is again heavily tilted in favor of CASA, which CASA is up 30%. And as I mentioned, in terms of proportion of total deposits, there is a significant uptick. Within CASA, current accounts have grown even more, where the growth that we see YOY nearly 18%. In current accounts, a key driver of growth has been our cash management product, which is very successful. You would see in the presentation the figures, both in terms of the deposits that we are getting on that account, as also the fee income that we are earning, and the rate of growth which is there. Going forward, we believe we should be able to continue to push this product aggressively. So we are, as we mentioned, the second largest corporate bank, with about an 8.5% share in the total corporate lending. So there is a huge potential which is there in terms of pushing our cash management product, particularly in the context of the recent RBI guidelines, where the current accounts are largely to be held with lending banks. So we would want to push that opportunity, and we believe that will help us drive current account growth even going ahead. The third point I want to focus on is in terms of asset quality. So we are again continue to have very tight underwriting standards, and whatever growth that you see is despite those tight underwriting standards. 3/4 of the corporate book that is underwritten in the period under review has come from either accounts which are either A-rated or government entities or PSUs. Right? That is 3/4 of the growth that we have seen. Similarly, on the retail side, 73% of our borrowers are credit scored 725 and above. Third, in terms of unsecured retail, that is less than 1% of our total loan book. When we look at the agriculture side, nearly 40% of the growth that we see in agriculture has come from gold loans. So gold loans are about 20-21% of our total agriculture book, but in terms of the incremental agriculture book, they are more than 40%, and we do hope that going ahead also, 40-50% of agriculture growth will come from gold loans. Similarly, on the MSME side, more than half of the growth that we see, in fact, significantly more than that, has come from the government guaranteed scheme. Of the other growth also, a large part comes from PSB 59, which is the digital channel, which is there for all public sector banks to access MSME loans. And here, the quality is proven to be significantly better as compared to general MSME loans. So to again re-emphasize the point, on the MSME also, the growth has come either through risk mitigated products like the government guaranteed scheme, or again through digital loan products which have a better quality. The bank as of now is currently executing a very ambitious project for digital loans, of which MSME loans will be a big part, and we believe going ahead also that should help us improve the underwriting quality. Having said that, we do accept that there will be some stress which will play out in the MSME and retail book. Right? There is still something which is in the works, but we believe that this stress which we expect to see will be offset by lower credit costs on the corporate book. So in terms of our NPA ratios, the GNPA ratio, which is published, stands at 8.48. The pro forma GNPA ratio, if you would take into account the implications of the Supreme Court judgment, is 9.63. Net NPAs, which are published at 2.41, it comes to 3.36. There also, despite whatever we have seen, we believe there is YOY improvement. We do expect, again, that even as we end the year, despite the impact of COVID, we should end with figures in terms of gross and net NPAs, which may not be any worse as compared to what they were a year back. Coming to the restructured book, our restructured book is about 1.38% of our total loan book, right? But a part of this is again already counted in the NP pro forma NPAs. If we were to eliminate that, it is only 0.80% of the total loan book. And there is a significant proportion of this which is likely to be upgraded within this financial year. In terms of provisioning, we are adequately provisioned. PCR is 85%. The impact of the Supreme Court judgment is fully provided, both in terms of provisions on loans as well as the interest which has been booked. The NCLT loans are provided up to 93%. We hold COVID provision of about 1,700 crores, and then over and above that, BOB, as we have discussed in the past, on certain categories of impaired assets like subprime loans, provided at a higher rate as compared to RBI norms, 20% as against 15%, and also similarly on certain other categories like unsecured loans. And on this account, we hold a provision of nearly 1,500 crores, which is over and above what the RBI requires. So we feel fairly comfortable in terms of where we are in terms of provisioning. In terms of the impact of the Supreme Court judgment, I think I mentioned briefly what would have been the figures on the pro forma basis for gross and net NPAs. Now that also plays out in terms of the cost to income ratio, because you recognize interest which otherwise would not have been recognized. So the cost to income ratio would have been nearer 50% as against 48% that we have in our accounts. Similarly, domestic NIM, which is 3.07, would have been nearer 2.9% otherwise. In terms of collection efficiency, that continues to improve, and as compared to 91% last quarter, it is at about 93%. There will be residual challenges in retail and MSME, but in corporate, it is above 95%. Lastly, in terms of capital plans, since we met last quarter, we have raised about 1,200 crores by way of fresh AT1 funds. Of our AT1 program of 4,500 crores, we have already done 3,700. The balance, again, we are likely to do in this quarter. In terms of pure equity, we are looking at accessing the QIP market during this quarter, and that might be of the order of 2,000 to 4,000 crores. Now, in terms of overall capital position, if we were to take into account the AT1 that has been raised and the profits that have accrued in up to Q3, we would have a CAR of about 13.3, 13.4%, which is slightly better as compared to what it was at the beginning of the year. And taking into account the likely accruals over the rest of the year, and also the QIP we are talking of, and some capital release we expect from certain loans which carry 150% risk weight, which are likely to go out, or at least there are opportunity for them to go out over the next 3 or 4 months. That also gives us the option of deploying those funds in assets which are nearer our average WA of about 50% as compared to the nominal assets. So we believe in terms of capital, we are fairly well positioned, both for taking into account any residual stress and also the growth that we want to target. So those are the points I thought which might be useful in terms of some questions you might have in mind, but now happy to take whatever questions that come our way.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Participants are also requested to limit their question to 2 per participant. If time permits, you may join the question queue for any follow-ups. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Gaurav from Bowhead India. Please go ahead.
Hi, sir. Thank you for the opportunity. Sir, just a couple of questions. I was looking at SMA1 and SMA2, which you have disclosed in your presentation. And I think the number seems to have changed for September 20. It was 5.46% at the end of September 2020, which is reported as 2.88% in this quarter for September 20. So is there anything which I'm missing? Why is that reclassification, or, is there any way, the way you have changed the data?
So I'll request Mr. Jain, I get to take the question, please.
Yeah, this time we have reported based on the credit data, and it is more than 5 crore.
Okay, sir, but what's the need of changing the data, because you have been reporting in the previous format for like more than 8-9 quarters. So if you could disclose, maybe what is the similar number for this quarter, that will help us to understand the historical context of SMA1 and SMA2. So the way you used to report till last quarter, if you could share number for December quarter, this quarter also, that would be very helpful.
So I think, Gaurav, what we have tried to do is to, again, over a period of time, make our presentation as closely benchmarked to what it is on peer basis, so that helps your comparison also, but we'll give you those figures.
Great. And sir, your international slippages, they came at around 4,000 crores. So is there like one or two accounts which reflect the slippage, or like is it more of broad-based? And how do you see the run rate, from this side going forward?
So you're right. So the international slippage increase is largely on account of two accounts. One of that is almost, I think, 2,700 crores. That account had slipped in December 19, got upgraded in March, and now again it has slipped and is likely to get restructured. So that is one single biggest loan which is there. There's another loan of about 800 crores rupee value, which is likely to get restructured. So these two pieces account for the major proportion, and simply because the fact that these are two large pieces where there was some history of stress, we do not believe that this is something which is likely to be of anywhere near similar proportions going ahead.
Perfect. Sir, if I could just ask another question, on the Diwan housing front, considering, there is a lot of reporting from news channels. So what could be your recovery, considering, you had 4,000 crore of exposure, but the direct exposure was around 2,000 crore. So if, the account recovers, let's say in the next 6 months, how much recovery can you show in your books? Is it a 2,000 crore recovery or a 4,000 crore recovery?
So I'll just attempt to answer the question, but hand it to Mr. Jain because he will give you a more authentic reply. So as far as the exposure which is not on our books, right, pools that we have purchased, there's no issue anyway. That is performing well. So there is no question of any significant haircuts at all there. Now, when it comes to the direct exposure to Diwan, there our recovery will be exactly of the same order of as any other bank, which is near about 2,000 crores. But again, I'll defer to Mr. Jain for his comments.
Yeah, our direct exposure to Diwan housing is close to 2,000 crores. And we are expecting a recovery of around 800 crores. And this account we have fully provided for.
Okay, sir. Great. I will come back to the queue if I have more questions. Thank you.
Thank you. The next question is from the line of Jai Mundra from B&K Securities. Please go ahead.
Yeah, hi, sir. Sir, if you can talk about the restructuring request. Is this the final, or do you still have something in pipeline, especially from the corporate side or MSME side? And maybe if you can quantify the three large sector and maybe the cases, individual cases above 500 crores.
So this is, I think, should be pretty much final, right? The window for invoking the restructuring ended on 31st December. There's still, of course, the MSME scheme, which runs up to March, but then in terms of relative proportion, that is likely to be a smaller figure. So we don't expect this figure to change very much from where it is now. And in terms of sectors, you will have the usual suspects that there is, of course, retail, organized retail, which is there. There's construction. So I think those are the kind of sectors that you are looking at. But again, hand it to Mr. Jain again to give a little more color on that, please.
Yeah. So this OTR is 9,500 crores, right? And out of this, around one-third is on account of the account which are already been is a part of performance slippage. One-third of that. Second, the account specific, it includes basically the retail, it includes the constructions, it includes the power, R&M steel, textile, real estate, and like this.
Right. And sir, what would be the number of accounts which are, let's say, more than 500 crores or more than 1,000 crores? Maybe more than 500 crores.
It may not be more, maybe around 6 accounts, not more than that. Except I will give you.
Yes. And in the meanwhile, sir, the second question is on SMA 1 and 2.
Yeah.
So we've given the collection efficiency as 92% and SMA 1-2 is 4.4%. So the rest is actually SMA 0, right? Is that the way? Because we have already bifurcated the pro forma number in this calculation, right?
Jenta?
Yeah, remaining will be the SMA 0, right? Yeah.
Right, sir. Okay, and the last question, sir, from my side. The ECLGS, sir, what is the quantum, and do you see any signs of maybe quality-wise incipient stress there? Of course, there should not be any stress in the near term, but just your comments there.
So I think we have disbursed more than 8,000 crores in terms of ECLGS loans. Early days in terms of stress, but as a broad point, what I mentioned earlier, we do believe that when it comes to both the MSME and retail, there is going to be some stress which is likely to play out. In MSME, of course, to some extent it is mitigated by the fact that the ECLGS exposure is not on your books. But in comparative terms, I think this is something where you might say that the entire story has not completely played out. Now, there are possibilities, and the reason again I mentioned is that we are not completely certain there. You don't have the kind of handle you have on corporate in these places because this is an unprecedented situation. Retail stress has never been an issue, but here there's no doubt that we are likely to see stress which is more than historical levels. Similarly, MSMEs, in terms of their resilience, they are more impacted as compared to corporate, and our ability to assess the extent of stress is also a little more difficult, which is why we are being a little cautious by saying that we expect more stress to play out on MSME and retail, but we expect this to be balanced by the fact that we have a better handle on corporate and where we expect stress to be less as compared to historical levels.
Right. Great, sir. Thank you so much, and I will come back.
Thank you. A reminder to our participants, if you wish to ask a question, please press star then 1 at this time. The next question is from the line of Maruk Adajania from Elara. Please go ahead.
Yeah, hi, sir. So my first question was on ECLGS only. So your disbursals of 8,000 crores, what is the base of loans on which these disbursals are made? So what is the amount of loans that have taken ECLGS of 8,000 crores?
So there's a clear proportion there, right? That you can give 20% of the limits.
Yes.
So I think we have to just multiply it to that extent. I think, and we'll have the figure. So, but in terms of the people who are eligible, nearly 90% of again the low eligible borrowers again avail of that facility. Here we must recognize that this loan came at an interest rate which is significantly lower than the coupon that the regular loan carries, right? So therefore, I think we need to be a little careful also there. While again there is an issue of stress in the MSME sector, but this need not be taken necessarily as an indication of the kind of book which is under stress, because it simply made enormous good sense to take.
Correct, sir. So it's fair to assume that everyone who took the loan took the full 20%.
Absolutely, because you're getting a rate lower than what we are charging you on your main loan.
Okay, sir. So, and in terms of slippage, so the total slippage for the quarter is 131 billion. That's the right figure, right? 130 billion around, including the standstill NPLs.
Yes, sir. Would you want to take that?
Right. 8,600 crore is a pro forma and 3,984 is a slippage. right? You have.
So that's correct.
Okay, sir. So, and the other question was that just in terms of outlook, so you already gave an outlook on corporate, MSME and retail, but in terms of slippage, do you think this would be the peak? Because we already had 131 billion of slippages, which is probably probably high, right? So could we say that it's the peak of slippages now?
So yes, I would venture to say probably yes, and that's on two counts. One is, of course, that when we look at this quarter, right, we have to accept that there were slippages which would have happened in previous quarters, either because, and were postponed either because the moratorium was available or because of Supreme Court judgment, etc., etc. And if we were, just by way of testing the hypothesis, to just aggregate these slippages in Q1, Q2, Q3, FY21, and compare that with the aggregate slippages in Q1, Q2, Q3 of FY20, you'll find that the figures are not very different, right? That's one. Number two, again, wherever you might say there was some residual stress, there was an opportunity for a large proportion of borrowers to actually elect to go for restructuring. So that's something which has also completely played out. Three, this also includes on the international side, something which you might say was an exceptional level, unlikely to be replicated in future quarters. So therefore, on strength of all these 3 points, I would venture to say yes, indeed. I think this represents by far the peak for all these reasons.
Sir, next year, if you do next year when slippages normalize, what normalization level would you anticipate? Right, because the merge numbers, after the merger, there was a spike in slippages, and then now because of COVID. So next year, if you just had to guess the level of slippages, how much would it be? Would it be below 2%? Would it be under 1.5%? What would be your best guess?
Jan sir?
Madam, there are 2 points. Basically, you talked about 13,000 crores. Out of this 13,000 crores, close to 3,000 crores also will be upgraded when we will do restructuring. It is a part of OTR. And as per the OTR guideline, if it is not implemented, it will be a slip. Of course, since Supreme Court order, this account has not slipped, and it is a part of the performance slippage. So this amount will be reversed. First point. And the second point, what you talked about is that slippage number. If I see bank as a whole, around 19,000 crore of slippage of last year, March 20, and our slippage is 8,200 crore. And performa 8,000, 6,000, or if I exclude 3,000, so it is 13,000 vis-a-vis 19,000.
So I think the point that Mr. Jain is making is that if you look at this 30,000 crore figure, this includes accounts where the restructuring has been invoked, will get implemented, and therefore again you will find that these do not count as slippages by March. So that is A. Number two, if you adjust, you will find that they are actually lower as compared to the previous year, and going ahead, taking all these things into account, we should be fine. But Mr. Jain has not given you a percentage, but I venture that it is likely to be pretty much in that ballpark, maybe on the lower side.
As in what ballpark? What we saw in
1.5 to 2 you mentioned, right?
Right, yes. Okay, sir. Thank you.
The answer of Jai Mundala's question, there are 6 accounts which are more than 500 crore where OTR has been involved.
Maruk, is the question answered?
Yes, thank you so much.
Thank you. The next question is from the line of Manish Shukla from Citigroup. Please go ahead.
Good evening, sir, and thank you for the opportunity. At one point, you mentioned that there is an overlap between pro forma and restructuring, and adjusted for that, restructuring would be 0.8. Is that number right?
That's correct. That's correct.
Yeah, sorry. Then the other question is there an overlap between the SMA book and the restructure book?
Absolutely.
So what would be the quantum there?
I think we can give you the exact numbers there, but I think that is absolutely correct. We can give you the exact number there.
Okay. Going back to your comments on the retail and SME stress likely going forward, one would have thought that by 31st December 2020, either those loans would become NPA or they would have been restructured.
I'm wondering why do you see further stress beyond the restructuring numbers on retail and SME, because moratorium expired on 31st of August. So by end of December, either those loans should have been an NPA or restructured or performed. So of that performing class, you still see stress. Is that what you're trying to imply?
So what I'm trying to say is that if we are looking at two contexts. A, that if I have to speak with a higher degree of confidence, where can I venture further? So I believe corporate, because of its very nature, you have a very high degree of clarity in terms of what the quality of book is and also what might be the residual stress there, right? That's A. B, if you see the restructuring figure, about 80% has come from corporate. Given the degree of stress which might be there on the retail book because of the issues that we have in the economy, the restructuring figure is very low, which means that the stress which might be there has not been significantly addressed through the restructuring option, right? And that might be simply because of the granular nature of the book. 3, on a historical basis, the stress in retail has been very low. So if you were to ask me that where is a higher degree of uncertainty, then I would venture to say that it is on the MSME and the retail piece. This of course is anecdotal. What you're saying is absolutely correct. On an empirical basis, you would expect if something had to become NPA, it would have become NPA now. But I still believe again that there may be a little more a note of caution which should be exercised when it comes to retail and MSMEs as compared to corporate, where we are fairly confident that we have a good understanding in terms of the degree of stress and how it should play out.
Right, thanks. And really last question, on the international book, what is the level of comfort? I mean, obviously we don't get much color on which country is doing how well. So in terms of any likely stress coming through from an international book, or you think that is fine beyond what we've seen in the December quarter?
So again, the very fact that the single largest piece of stress that is paid out of the international book, right, came from an account which had slipped in December last year, got upgraded, and now has slipped and probably will get restructured. I think that's a fair indication that the accounts which are under stress, they have been identified and again they are addressable. So as a specific answer, we believe that we are reasonably comfortable with our international book. The big chunky pieces which might have caused us trouble, they are here for us to see in this quarter.
Got it.
And also the second loan which is there, apart from this 2,700, there is 800 crore loan which is there, that also is likely to get restructured. So I think the stress in the international book is eminently addressable.
Got it, sir. Sorry, last question on ECLGS.
Yeah.
When, if at all, is that stress likely to start showing up? After 12 months, after 18 months? How is basically the scheme structured? So let's say some of those borrowers were to fail or, not service the debt. When do they actually become NPA?
So I think once you have taken advantage of the scheme, right, they'll become NPAs exactly the same way. There's no issue. So again, the fact is, as of now, we don't really know how it will play out, because the fact is you have made 20% of the fund-based limits available to the borrower, which would mean that if there were any challenges in terms of extension of working capital cycle, they seem to be adequately addressed. So the people should be all right. But again, I am only being cautious simply because my understanding in terms of what is the kind of stress, whether it has been fully addressed, whether there are still challenges, do people have issues in terms of availability of labor. I think these are things which are very difficult to get a handle on in a portfolio which is as granular as that. So I would prefer to be cautious there. But again, in terms of an exact timeline in which this possible stress would play out, tough to say.
Sure, sir. Appreciate that. Thank you. Those are my questions.
Thank you. The next question is from the line of Mahesh MB from Qtr3 Securities. Please go ahead.
Good evening, sir. I just wanted a confirmation. What is the total slippages that you reported on a pro forma basis?
So I think totally 8,000 odd. Mr. Jain again has a better head for figures. I'll request him to give you the number.
Yeah. Pro forma number is 8,637.
Okay. And would you have a breakup between retail corporate on this?
Yeah, that I can say. This agri is 682.
Yeah.
Corporate is 5,669.
5,669 crores.
MSME is 1,054.
1,054. Okay.
Retail is 1,103.
Okay. And
that is 129, adding up to 8,637.
And this 5669 includes the international loan book of 4,000 crores.
No, international already stripped because Supreme Court order is applicable in India.
Okay, so 5669 crores of corporate slippages, could we have some color on where is it coming from there?
So this 5,669 includes the construction, includes the NBFCs, includes the retail. Of course, part of this is under OTR.
So as a rough figure, a significant proportion of this figure is where restructuring has been invoked and is likely to help us get significant upgradations.
Okay. Sir, can we also, on this international account which slipped of 2,700 crores, could we have some color on which sector it has come from or which geography it is?
So this is it's a chemical company which is there, which operates out of the Middle East.
Oh, okay. And final question of this question was asked earlier. Is it possible for us to get the outstanding SMA 1 and SMA 2 book today?
We can do that. I think we'll give you those figures. But as a general proposition, if you look at the SMA 1, 2, I think even if we were to again go granular, the proportion will be pretty much in a similar ballpark, which means 4 to 5%.
Of the overall loan book, is it?
Yeah.
And this has improved, it has remained stable, it has deteriorated. Where is it as compared to, let's say, what it was in March?
It is elevated if we were to compare to last year, which is quite understandable, right? But again, as we mentioned, this is where again you might say part of my caution in terms of the future comes from, because even with this SMA, to the extent that we have corporates, you have a fair assessment in terms of how is it likely to play out. But when it comes to smaller loans, you really don't know. As you mentioned, or maybe again it was the previous question, that if they were to have become NPAs, logic says they should have become NPAs now. But having said that, the fact is that there are possibilities which are there, right? People again took a moratorium. Now they have paid up few installments. Now whether they have, it's simply a question of good habits coming back, or actually they are constrained in terms of cash. That's tough to make out as of now.
Sorry, thanks for this, but just kind of reconfirm this. You said the reported SMA 1 and SMA 2, as per your presentation, shows 4.4% for loans above greater than 5 crores. And how is it that it is the same for the overall loan book as well?
So I think we just give you the figures. If we were to adjust, and I'm just again giving you, because what happens is there are too many complications in this, which is the reason why we did not hold it out. That too many complications come from things like things which are showing in SMA, but actually are also part of the Supreme Court book, right? Possible. There are SMAs where restructuring has been invoked, which is why again we thought that let's give a number where we actually have more clarity in terms of how it is likely to play out. But we'll give you the number, but we'll have to adjust that number for again all these factors.
Oh, sorry, just one clarification. So if I say SMA 2 book of 4.4%, and you've also included this quarter corporate slippages of 5669 crores, so this is also included in SMA 2?
Which one?
You have indicated that the SMA 1 and 2 book is about 4.41.
Yeah, 5 crores plus, right?
Yeah, and you have reported pro forma slippages of 5669 crores.
Let me, again, I'm getting confused myself. Jayasab can take...
Yeah, sir. Let me clear, sir. So we have reported 4.41. It includes performance slippage. If net of performance slippage, it works around a 3.6% also.
Okay. Okay, sir, if it's possible, if you could just kind of, because the retail, we just wanted to see how much of pain is sitting in that smaller ticket loans. If you could get that will be helpful.
Yeah, we could do that. Again, we'll have to do detailed numbers in terms of where restructuring is invoked, how much is in the performance division. We can do that.
Perfect, sir. Thanks a lot. Yeah, thanks.
Thank you. The next question is from the line of Ashoka Ajmera from Ashcon Global Services Limited. Please go ahead.
Hello.
Yeah,
good evening, sir. First of all, let me express my compliments and congratulations to you for completing this entire merger process so smoothly within the deadline that now it has, all the three banks have become full-fledged Bank of Baroda. I mean, it's a great job which you have done. Secondly, there is a very good performance if you look at CASA, if you look at improvement in the asset quality, and still in spite of all these happenings, still showing a good profit. So my compliments to you. Having said that, sir, I have a couple of observations and some questions. like last time also we have discussed that, in the segment-wise reporting, for the first time in the many quarters, you had shown a profit in the wholesale book of 63 crores. Before that 3,836 crore loss. And you had said that now since 85% provision has already been done, there is no much pressure on this. But again in this quarter, if you look at segment, 1,800 crore rupees of loss in the wholesale book. And all the income is coming again from the treasury books only. So, can you throw some light on that?
So I think I'll request Jansab to take
Yes, sir. Ajmera sir, point is that we have made a provision for this performance slippage, right? And if you see this, out of 8,600, 5,700 is a corporate book. So whatever provision we have made, of course it is a part of standard asset, it has been factored while calculating this segment reports. And that is why it is a loss.
Right, sir. Sir, just I was looking at this Nbfc exposure of the quarter. While the BBB exposure has come down by around 500 crore, the BBB and below exposure has gone up by 1,700 crore. I mean, if I'm right. So is there any reason, or are these NBFC's TLTRO 2, or what was it? That 1,700 crore is the BBB below book has gone up, and BBB has come down by 500 crore.
Yeah. So I think you are right. Largely it is driven by the fact that we have accessed funds under TLTRO and also again taken advantage of the partial credit guarantee scheme, which is why again that exposure has gone up. Also, we are actually trying to see that when it comes to the private book, right? So I think a very large proportion of our Nbfc exposure, I think it will be 70% plus, Samit can give the exact figure, is to entities which are either owned by large private sector entities or PSUs. But of the balance, what we have tried to do is to see how it can be more diversified, that your concentration is not high in any particular exposure. So most of the exposures which are there on account of the private sector, they have come down significantly in terms of quantum, and we have substituted that by exposures on smaller NBFCs, which we believe are of good quality and where we were able to get the benefit of a partial credit guarantee.
Great, sir. Yeah, sir, coming to this, just a few cost points. Now the operating expenses have gone up by 250 crore in this quarter. That is why the cost to income ratio has also gone up to 47.48% from 46.15%. And the employees cost also has gone up substantially by 250 crore in this quarter. While we are saying that we are going to get the benefit, or we are getting the benefit of the merger of all these three banks, what is the reason of this cost, operating cost, and this employee cost going up, sir?
So if you were to look at the line which says salary, right? That is showing a small decline YOY, but there are other costs which are there on account of employees. So these are largely on account of the AS 15 requirements and the provisions we had to make as per the actual valuations. But again, Jansab can shed more light on that.
Yeah, that's AS 15 provision has increased because of the wage revision. And since the wage revision, the pension liability will increase, so that is why we have to make higher provisions here. But you see, 9 months, you see, the salary has come down by -1%.
Thank you, Mr. Ajmera. I request you to join the queue for any follow-up, as we have several participants waiting for their turn. The next question is from the line of Shashank Verma from Axis Mutual Fund. Please go ahead.
Hi, sir. I have two questions. First question on this slippage of approximately 4,000 crores in your international book. Have we taken any provisions? And that is the first question.
Yeah, so I think yes, of course. The fact is, it is since this is something where you don't have any protection, this has been recognized as NPA, and we have taken provision as per our norms, which has, I would believe, a 20% provision what we provide on substandard assets.
Okay, thank you. And sir, we used to provide a watch list a couple of quarters back of stressed accounts. We have not shown that since the last 2 quarters. So has something changed there significantly, or is it because of a lot of these regulatory overhangs that we are not providing that number as of now?
So I think any specifics again always become a bit challenging at times. So that is the reason for that.
Okay. Okay. Thank you.
Thank you. The next question is from the line of Mohit Surana from CLSA. Please go ahead.
Yes, sir. I just wanted one clarification. You have said that there is around 1,900
Mohit, your
crores.
audio is breaking. We are unable to hear you clearly. Please use the handset.
Yeah. Is it better now?
Yes.
Yeah. So my question is that there is around 1,900 crores of provisions against potential interest reversals and against potential slippages on pro forma NPAs. And then there is around 1,700 crores of COVID provision. So is there any overlap or the two are separate?
Jenta?
Both these two are separate. So point is the performance slippage is 8,500 crores. So we have a provision of 1,522, 370 and the COVID provision of 1,700. So put together we are having a provision of 3,600. Is against the performance slippage of 8,500.
Okay, got it. Thanks a lot for that. Second question is that
Can
the
you please
1
use the handset because the audio is still not very clear.
Is it better now?
Yes.
Yeah. So the second question is that 1.4% restructuring that you mentioned. Is this all of this restructuring is incremental restructuring? I mean, there is no carry forward from previous quarter, right?
So this 1.38% is the aggregate amount of restructuring which has been invoked. Some of this has actually been implemented, a very small proportion of 1,000 crores. The balance will get implemented over the March and June quarters.
Sure. And the last question is that on the employee expense, can we expect the similar run rate going forward on employee expenses, or is there any provision that can still be made in future quarters?
So I'll just give a preliminary response and Jens have to confirm that. I would believe that in March we should see a similar run rate and possibly we should actually see a decline after that quarter.
Yes, sir. Yes, sir.
Okay. Thanks a lot. These were all my questions. Thank you.
Thank you. The next question is from the line of Sonal Kohli from Bowhead. Please go ahead.
So thank you for the opportunity. A couple of questions, sir. As far as your retail book is concerned, would you broadly know how much of that would be from government-based employees? Because at least that part of the base wouldn't have been impacted much because of COVID. What I meant was government-based companies or, central or state government employees. Like State Bank gives you some idea of that kind of book. Would you have some color on that?
Frankly, no. I think the only, you might say, relevant figures that might allow us to get a handle in terms of the risk that book carries are two indicators, which I mentioned before. A, that 73% is credit scored 725 and above. And B, that 70% of the book is home loans. So I think in terms of both quality as well as loss given default, that is where we get the comfort from. Unfortunately, and that's more again you might say a data issue, I don't think we have a very accurate estimate in terms of whether these employees are employed in PSUs, governments and the like.
So if not an exact, a very rough estimate?
Tough.
70%, 80%, 40%?
I don't think it is going to be that large. I think it's lower than SBI most certainly, simply because of the kind of business that BOB does. But again, if I were to give you an estimate, again, I wouldn't be confident about that.
Got it, sir. Secondly, sir, do you have any idea about the, what would be the breakup of the book which would have become, NPA had it not been for Supreme Court order? What I meant was breakup in terms of agriculture, retail, SME, corporate.
Yeah, I think the Jens gave that figure earlier, but I'll just request him to see if he can just give that again.
Yeah, this is 8,637. Here agri is 682. And corporate is 5,669. MSME is 1,054. Retail is 1,103. And others is 129, aggregating up to 8,637.
So, sir, you are considering that, the retail, part and MSME part is not that larger portion in terms of old spreads, I think for SMA1 and SMA2, the similar trends would have also unfolded, historically you used to give SMA1, SMA2, for you were one of the very few banks who used to do that, But this time you haven't shared your total SMA1 and SMA2. Would it be possible for you to, share these numbers by notifying the exchanges, in line with, your historical trends? Or wouldn't it be possible for you to share these?
So I think the only challenge, as we mentioned, was that when it comes to larger loans, it's much easier for us to give a clear, transparent impression in terms of how, again, the overlaps play out between restructured, again, things which are part of pro forma NPAs, which is a bit of a challenge, again, which is there, but we'll try to see how we can help there.
Thank you, Mr. Kohli. Request you to join the queue for any follow-up. The next question is from the line of Mona Ketan from Dolat Capital. Please go ahead.
Hello. Hi, sir. Good evening. Just two quick clarifications. So this 8,600 crore of pro forma slippages or the notional slippages that we had during this quarter, I understand this is for Q2 and Q3 together, right?
Right.
Okay.
This is on 31st December.
Got it. So it includes both the quarters is the clarification I was...
Right.
Okay, got it. And secondly, this your 1.4% of restructured book, this does not. This is all COVID-related restructuring, right? There would also be some one-time restructuring that was in part of the earlier MSME relief program, which is not part of this pool, right?
Right. Which we have separately placed in the notes on accounts around 4,000 crore of the total aggregated number.
Got it. Thanks so much.
Thank you. The next question is from the line of Deepak Kumar Tapadia as an individual investor. Please go ahead.
Hi, sir. Sir, can you give me the exact adjusted book value after removing the deferred tax assets and revaluation reserves, sir?
That is a tough one for me. I wonder whether Jens also would have that number or not, but let me pass it on to him.
I have to calculate, sir.
That's a tough one as a googly. So we get back
calculate and provide, sir.
We'll give you the number, please.
Approximate number.
We'll give you the exact number, but we just need to work it out and give it to you, please.
Okay. Thank you, sir. Thank you. That's it.
Thank you. Any participants who wish to ask a question at this time, they may please press star and 1. The next question is a follow-up question from the line of Mahrukh Adajania from Elara. Please go ahead.
Yes, sir. Hi. Just to clarify, the overlap in restructuring and pro forma slippages is around 30 billion. Is that correct? 3,000 crores.
Right, madam, right.
Okay. And when we talk about collection efficiency of 91 or 92%, what is the denominator? The denominator will not include NPLs, correct? It will be just...
Denominator will be standard.
Standard. Okay.
For this collection efficiency, what is demand and what is recovery?
Got it, sir. So, and just one last question. I could not catch the proportion of gold loans and agri loans.
So the proportion is as of now about 21%. And in terms of incremental growth, it is more than 40%.
Okay, sir. Thank you so much.
Thank you. The next question is a follow-up question from the line of Jai Mundra from B&K Securities. Please go ahead.
Rating breakup slide where we have written some 12% is unrated, is below BBB. So can you give the absolute amount? I mean, because I don't know which figure to use. Is it the entire corporate book or what is the absolute amount for this chart number 14?
Jens or Samir, if you have the answer.
Sorry, Samir, we are unable to hear you, sir.
Yeah, hello.
Yes.
Yeah, hi. Jay, we will get back to you later on with this answer. I'll email it to you.
Sure, sir. Sure. And just on, sir, collection efficiency once again. So I think what is the meaning of this word when we have written that the collection efficiency stands adjusted for Supreme Court order? Because I think you had clarified that 92% does not include GNPA, of course, and it does not include the pro forma slippages also, or does it include that way?
It will not include the pro forma slippages, right? You can either show it as NPA or you can show it as a standard asset.
Right. So 8% is, so the rest 8%, it also does not include the pro forma slippages, right?
Correct. That's my understanding. Yes, I can confirm that.
Right, sir.
Great, sir. Thank you, sir, and all the best.
Thank you. The next question is a follow-up question from the line of Ashok Ajmera from Ashwan Global Services Limited. Please go ahead.
Yeah, thank you for giving me the opportunity once again. Sir, if you look at the outstanding, I mean the advances, there are two segments like power and telecom where it has gone up in this quarter substantially. I mean, if you compare with the overall, which are this, I mean, what kind of companies these are in this power and telecom? Power has gone up from 31,000.
So there are not too many telecom companies that survive, right?
Pardon?
There are not too many telecom companies that still survive today who could borrow money.
Yeah.
So I think, please be assured that again, these are companies which are strong, robust, where the new exposure is coming, but not possible to give you names there.
All right. Same thing is in power also?
Yeah, absolutely.
And sir, this, when you say that, rating profile of standard, and when we see the exposure column of December 2020, the total exposure is 99,760 crore, and down below there is a note of net outstanding advances, that is 93,647 crore.
Yeah.
So I mean the exposure as on 31st of December is 93,647 crore.
Yeah, the outstanding would be there. That's correct.
Okay, not 99,700.
Yeah, so that would mean again there may be committed lines which might be there, undrawn limits which might be there, which is how you would compute the overall exposure.
All right, sir. And again, coming back to this collection efficiency, sir, 92%. Now, this is the collection of December quarter, or say last demand must have been made in December. So the collection includes the collection which has taken place even after this 31st December, that is maybe from 1st January to 15th January?
Tough question for me, Jen sir.
Collection during the quarter ended December, from 1st October to 31st December.
But demand made only in this quarter, or demand of the earlier quarter also, but collection in this quarter?
No, demand is of the current quarter. Collection can be of the previous quarter. What happens if your account is a SMA, just SMA 0 or SMA 1, so they will pay the amount and the account may remain in SMA 0 or 1. So in a numerator it is a collection, denominator is a demand.
So suppose, I mean, the collection is 92% or whatever the demand was made. Now, out of this 92%, some percentage of the collection can be from the demand from July to September quarter. Isn't it?
July to September, maybe. Suppose the account is a SMA 1 in September quarter, right? It can be an SMA even in December quarter, but he has paid. So collection is there. So he is perennially in a 0 or 1, but he is paying whatever is demand for the quarter.
Okay, so in absolute numbers, can there be...
the point is that suppose my demand is 100 rupees and he has paid me 92 rupees. So 92 rupees may be of September quarter, maybe of December quarter. So you can always say that the 5 rupees was a area demand of September quarter and 105. But the 5 will continue for the next quarter.
Okay, so similar spillover maybe there...
it can happen.
December quarter to March quarter.
Yeah, it can happen, sir. It can happen.
Because there was in some other public sector bank, there was a great confusion.
No, point is simple, sir.
And they to clarify, earlier they said 75% collection and then they said 87% collection. They rectified after the conference on this question.
No, but point is collection. In a numerator collection, denominator demand.
Okay. All right. Thank you very much, sir. Thank you.
Thank you. A reminder to participants, if you wish to ask a question, please press star then 1 at this time. The next question is a follow-up question from the line of Sonal Poli from Bowhead. Please go ahead.
Sir, what kind of recovery would you expect from Dewan Housing? Now it's reaching settlement, And in addition to Dewan Housing, any major recoveries would you expect, by the time we have, Q1 results next 6 months?
So I think Dewan Housing, we have exposure of 2,000 crores. So our share in the recovery should be in the region of about 800 crores there. In addition, there are some NCLT accounts, including a large steel company, where we do expect the recoveries to come in. Also, if you were to look at simply in terms of impact of upgradation, even accounts which actually have been classified as pro forma NPAs, where restructuring has been invoked, I think we should see a significant improvement on that account. But again, request Jansab to see if you would want to add to that.
Yeah. So you rightly said our exposure to Dewan is 2,000 crore and expecting a recovery of 800 crore, and this account we have already been fully provided for. In addition to that, in a recovery, we are having around 3,000 crore of a recovery where the NCLT has also approved the resolution plan, and even or 5,000 crore where the COC has approved the resolution plan. So we are expecting recovery there also.
So are you saying that you're expecting 8,000 crore of recoveries?
No, not. This is in pipeline. Out of that, how much we'll get, it depends on number of factors.
Yeah, what you're saying is that there's a 8,000 crore worth of accounts.
Now, 5,000 crore of account where COC has approved the resolution plan. Out of this 5,000, 3,000 crore where NCLT itself is approved.
Oh, I see.
Please don't add this, yeah.
Okay. And sir, you said the pro forma, NPAs which would get upgraded due to restructuring. Would you have that quantum? I'm sorry, I joined the call late. I was, attending some other call by then. If you already shared this.
Actually, this out of this OTR, maybe around 3,000 crores of a account where the restructuring can happen in the March quarter and remaining in June quarter also.
And then lastly, considering the economy is reviving, would any of your, NPAs which have become NPAs, like pro forma NPAs because of Supreme Court order, finally, do you expect a reasonable part of this not to become an NPA, because if the order is further delayed by another 1 or 2 months, do you expect some part of it would get reduced?
Jansab, would you want to help?
Yeah, naturally it will reduce now. When we will do restructuring, automatically it will reduce, first point. And second point, wherever we will get some recovery, outstanding will reduce and NPA will reduce.
Thank you. The next question is from the line of Shashank Verma from Axis Mutual Fund. Please go ahead.
So thanks for the opportunity again. So there was one East-based Nbfc account which we had tagged some time back under our watch list. Where does it come today? Is it a part of our SMA book today, or is it separate from that?
Again, can you repeat that? Which account are you talking of?
So one East-based infra Nbfc account. We had put it on our watch list a couple of quarters ago.
Yeah.
So wanted to check whether it forms a part of our SMA book today, or is it out of the SMA?
Yes, sir.
Generally, we do not discuss about the account specific.
Okay. And I had one more question on your consolidated operating profit, sir. Q2 to Q3, there is a sharp jump. In your PPT, you mentioned that as well. It is a sharp jump of close to 900 odd crores. What is it pertaining to? Because our standalone bank operating profit remains similar.
Jansab, I don't have an answer to that. Would you have any thoughts?
Q2 to Q3, yes. So maybe exact I'll see and separately advise to him, sir. Maybe in our subsidiaries there are some profitabilities.
We'll check it out. We'll come back on that.
Sure, thank you, sir.
Thank you. The next question is from the line of Naishi Shah from Acko General Insurance. Please go ahead.
Hi, sir. Thank you for this opportunity. So I don't know if I've missed this already, but could you tell me how are we placed in terms of the ALM?
I think given the fact that the liquidity position is very comfortable, I'm sure all banks are very comfortable. So I think our LCR should be of the order of 160-170%. So very, very comfortable there.
All right. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Mahesh as an investor. Please go ahead.
Yeah. Hello. Sir, you had this international slippages of 2,900 crore coming from some chemical company, and you mentioned that this account will be restructured. So how does the accounting happen? By when do we expect restructuring, and what will happen to the provisions which you have taken?
So this restructuring is likely to happen as per the June 7th circular, which would mean that there is a period of 12 months before it gets upgraded to standard, and that is when you write back the provision.
Okay. And which is the second account? You mentioned there is one more account, 800 crores.
Yeah.
Which sector is that?
I think I'm not sure how can I classify that as sector. Jensa, if you would want to hazard.
How to classify this is manufacturing of candles and all of it. So this is other sector basically.
So
and
you might say
this account will be covered under OTR, and it will be once the OTR is approved, then it can be upgraded.
So that will be within this financial year.
Earlier was in 7th June, and second one is in the 6th August circular of Reserve Bank.
So the first account, which is 2,700 crores, it will take a year for that to be upgraded. As for the second account, about 800 crores, I think there is reason to believe that should get done within this financial year or by June, either way.
Yeah.
And sir, there is we had 2,500 crores of provisioning from some government guaranteed account.
Yeah.
So what has happened to that? Have we returned back the provision, because it's almost 4 quarters now?
So there's been a partial write back, I believe, but again, Jensab can clarify that.
This provision we are carrying. This provision we are carrying because exposure is more than 2,000 crores. And till resolution plan is implemented, we cannot reverse it back. So this is the provision we are carrying.
Okay. And sir, one large steel account, we have been waiting for Supreme Court to give some judgment. But what has been the observation is that for last 6 months, there is no hearing only. Means Supreme Court just gives the date. And recently some 29A article has been also even ratified by Supreme Court. But still the judgment is not happening. So when do we see some light on that?
So it's tough again.
It's like quite frustrating. Supreme Court is not hearing the judgment only, not giving any dates on that.
Jensab, would you want to answer that?
Sir, account specific generally we don't discuss. No?
Yeah, but it's like for the industry it's quite big, and there is no hearing only.
There's both account specific as well as Supreme Court specific. So I think we'll let that question pass if you don't mind.
Okay, sure, no issues. Thank you.
Thank you. Ladies and gentlemen, that would be the last question for today. I now hand the conference over to Mr. Samir Narang for closing comments. Thank you, and over to you, sir.
Thank you, everyone, for taking out time. And
Sorry, sir, you're not clearly audible?
Hello?
Yes.
Yeah, Samir, fine.
Okay. Thank you, everyone, for taking out time, for joining us today for our investor call. And hopefully next quarter we would be able to meet in person. All the best till then. Thank you so much again.